Welcome to the Deep Dive. We're here with your latest intelligence briefing, really cutting through the last 24 hours in the crypto market. The narrative, it feels like it's shifted, doesn't it? There wasn't just a cautious rally anymore. We seem to hit a bit of a ceiling. Okay, let's unpack this. We've got huge structural news brewing, long-term stuff accelerating, but the immediate action, it's very technical right now. Consolidation seems to be the word. The real question, I think, is can this new demand we're starting to see actually punch through the resistance that's formed?
That's exactly the core conflict playing out. On one hand, we have a concrete, measurable, spot-driven demand coming back into the market, which is great news, right? It counters that bearish thesis we saw building up. But, and this is the crucial part, this renewed strength is running smack bang into a major technical ceiling. Sellers are definitely showing up there. And you're right about the bigger picture, though. Overshadowing the sort of day-to-day price swings is this accelerating convergence between TradFi and crypto. Some landmark announcements just in the last day or so really signal that this integration is picking up serious speed faster than maybe people thought.
Okay, let's start right there with that price ceiling. Bitcoin rallied, looked strong for a bit, but then it just stalled out sharply. So where exactly is that battle line right now?
It's pretty clearly defined around the $107,500 mark. That's the resistance cluster. It's not just one thing either. It was the 24-hour high, sure, but technically, it's where a few key things line up. You've got the 38.2% Fibonacci retracement level from the recent correction. That's a classic pullback spot. And critically, it lines up almost perfectly with the 200-period exponential moving average, the EMA.
Right, and that combination, the Fib level and the 200 EMA, why is that such a potent mix for traders? Why does it often act like a wall?
Well, the 200 EMA is just a huge long-term trend indicator. Lots of institutional funds watch it. So when that meets a key Fibonacci level, which traders use to gauge correction depth, it creates this psychological barrier, a point of confluence. Sellers anticipate buyers might struggle there, and liquidity tends to pool, and that's exactly what happened. Sellers emerged, pushed the price back down into this consolidation phase.
And since hitting that, like you said, we pulled back. Seems like we're pivoting around $105,300 now.
Yeah.
What does that stabilization point tell us?
It tells us buyers stepped in after the initial rejection. They absorbed that first wave of selling, established a higher low, essentially, which is, constructive. And it ties into the sentiment shift, too. That rally, short as it was, did manage to pull the crypto fear and greed index out of extreme fear.
Yeah, I saw that. It was down at 22 just a few days ago, wasn't it?
Exactly. Now it's bouncing around between 29 and 32. So firmly in the fear category, not extreme fear. And this is actually pretty good news. It means the move up wasn't driven by crazy retail FOMO or extreme greed. The market's still climbing that proverbial wall of worry. That usually provides a more stable base for any potential future gains rather than, a rally built purely on leverage that can collapse quickly.
Okay, so the technical picture is consolidation after hitting resistance. But the fundamental data, that's where things get really interesting, right? You mentioned two big bearish signals from last week flipped.
That's right. This is where the bullish case really gets its legs. First up, ETF flows. Remember that painful multi-day streak, over $1 billion out.
Yeah, $1.2 billion in outflows. That definitely weighed on sentiment.
Well, that streak is officially broken. The data for Monday, November 10th, it confirmed a net inflow. Now, it was modest, only $1.15 million. But the key thing isn't the size, it's the break. Just stopping the bleeding, stopping that outflow streak is symbolically huge for institutional confidence.
Okay, so the ETF bleeding stopped. What's the second reversal? You mentioned on-chain data.
Yes, the apparent demand metric. This is probably the most direct look we get at whether new spot buyers are actually absorbing supply from miners and longer-term holders. And it didn't just flip positive. It hit its highest level in 4 months. We saw 5,251 Bitcoin in positive demand recorded on November 11th.
Wow, highest in 4 months. And didn't that metric look pretty grim just last week? Let me pull up the numbers.
Yeah.
Yeah, the 30-day sum was deeply negative.
It was. Just a few days ago, the apparent demand 30-day sum was showing a net negative flow of netto 79,085 BTC, deep in the red. Then just 2 days later, it flips massively to a positive, plus 108,581 BTC.
Oh.
Yeah. That's a swing of nearly, 190,000 Bitcoin in demand pressure in just a couple of days. It's a really strong on-chain confirmation that fundamental spot-driven buying has returned and basically soaked up all that recent selling pressure.
Incredible numbers. So we're talking spot demand absorbing supply.
Yeah.
Who's doing the buying? Is it the whales stepping back in? We hear about the whale civil war a lot.
They are definitely a big part of it. The Civil War, older whales perhaps selling, newer ones buying, it's ongoing. But right now, the accumulators seem to have the upper hand. If you look specifically at those large wallets, the ones holding between 1,000 and 10,000 Bitcoin, collectively, they've added over 16,000 Bitcoin in just the past 7 days.
16,000 BTC added by large holders in a week.
Yep. That confirms a pretty aggressive spot buying strategy. They saw the dip and they bought it. And crucially, confirming the spot-driven nature of this, look at the derivatives market. Funding rates for perpetual futures are still hovering near neutral, around 0.00072%. Meaning this recent 4% rally wasn't primarily fueled by leverage or risky futures bets. It was genuine spot buying. That makes this current consolidation feel much more stable, less prone to a sudden liquidation cascade.
Okay, that spot demand picture is undeniably stronger.
Yeah.
Let's pivot to that structural story you mentioned, the TradFi convergence.
Yeah.
Because it feels like that shifted into a higher gear almost overnight. 3 big announcements.
Absolutely. Landmark number 1, SoFi Bank. They've launched SoFi Crypto. And this isn't just another fintech app adding crypto. SoFi is the first U.S. nationally chartered bank, OCC regulated, FDIC insured, to launch its own consumer crypto trading platform. They're directly competing with the big exchanges now, using their banking license as a key advantage.
I mentioned why, right? Something about customer preference.
Yeah, they cited their own data. Apparently, 60% of their members who already own crypto said they'd actually prefer to trade it through a licensed bank. So SoFi is leaning into that bank-grade stability angle, trying to bridge that trust gap for maybe more traditional, risk-averse customers who are crypto-curious but wary of exchanges.
Interesting. Okay. Landmark 2, Coinbase getting back into token sales.
Yes, and specifically for U.S. retail investors, Coinbase announced a regulated platform for token sales. This is a big deal because we haven't really seen this kind of regulated capital formation model accessible to U.S. retail since, well, the ICO boom back in 2018 basically got shut down.
So they're trying to bring back primary market access, but in a compliant way.
Exactly. The first project up is Monad. That sale is scheduled for later this month, November 17th to 22nd. It signals a potential reopening of regulated primary investment routes in the U.S. crypto space.
And the third landmark, Coinbase again, but in the UK this time.
That's right. Coinbase UK is moving deeper into traditional finance territory. They launched instant access savings. These are high-yield savings accounts, but denominated in British pounds, GBP. And crucially, they are FSCS protected.
FSCS. That's the UK equivalent of FDIC insurance, right? Protection for deposits.
Precisely. The Financial Services Compensation Scheme. So Coinbase UK is now offering government-backed savings accounts just like a traditional bank.
Wow. Okay, so if you put those 3 together.
Yeah, connect the dots.
Mm-hmm.
You have a major U.S. bank, SoFi, moving into crypto trading, and you have a major crypto exchange, Coinbase, moving into regulated U.S. capital markets and U.K. traditional banking services. The lines are blurring incredibly fast. This isn't just partnerships anymore. This is genuine, structural, regulated financial integration happening right now. It really validates the long-term staying power of this whole asset class.
Definitely feels like a fundamental shift. Now, quickly, let's talk on the macro backdrop. There was good news out of Washington, too, wasn't there? The government shutdown situation.
Yes, a significant tailwind. The U.S. Senate voted to pass the funding package. That ends the 41-day government shutdown threat. Politically, that removed a big cloud of uncertainty hanging over the markets, and you saw risk assets respond globally. The Nasdaq 100 was up, 1.2% to 1.5%?
The clear risk-on move.
Exactly. And that positive risk sentiment, that improved macro liquidity environment, it generally provides a tailwind for Bitcoin, given its correlation recently.
And sticking with institutions, there was news about a famous short seller, Jim Chanos, and his position against MicroStrategy MSTR.
Right. Jim Chanos confirmed he's closed out, unwound his short position against MicroStrategy. Now remember, his trade wasn't just a simple short MSTR, it was a pair trade. Short MSTR stock, long spot Bitcoin.
Betting on the premium shrinking.
Precisely. It was a bet that the huge premium MSTR stock traded at compared to the value of its Bitcoin holdings, the MNAV, or net asset value multiple, would compress. He basically said the thesis has largely played out. That premium, which was as high as 2.5 times the Bitcoin value at one point, has come down significantly, now sitting around 1.23x.
So Chanos thinks the easy arbitrage is gone. But does that mean MSTR is now seen differently? Less like just a leveraged Bitcoin bet and more like a regular company holding Bitcoin?
That's kind of the implication, yeah. It suggests the stock is normalizing somewhat, may be seen as a more legitimate, albeit still highly Bitcoin-correlated, equity play. The crazy premium might be gone, but clearly there's still strong institutional demand for Bitcoin exposure through MSTR, enough to keep a smaller premium alive, and MicroStrategy itself. Their conviction hasn't wavered one bit. They just bought another 487 Bitcoin for about $49.9 million.
Wow. What's their total hoard now?
Get this, 641,692 Bitcoin on their balance sheet. Just incredible conviction.
Okay, so Bitcoin is consolidating, TradFi is integrating, macro is supportive. But where's the really speculative money going now that the Bitcoin rally paused?
Yeah.
Seems like capital is rotating into altcoins with specific narratives.
Definitely seeing that rotation. And it's not just random pumps. Capital seems to be flowing quite deliberately into specific growth narratives, moving away maybe from some older themes. Narrative number one, getting a lot of attention, real-world assets, RWA, tokenizing real-world things.
That's been bubbling for a while.
It's exploding now. The market cap for tokenized RWAs, things like tokenized treasuries, funds, etc., has grown something like 260% just this year, 2025. It's over $23 billion now. And it's driven by institutional interest. There was a report saying a third of hedge funds are actively looking into tokenizing their own fund structures. They need the rails for that.
Makes sense. Okay, narrative two.
Payments and finance, or PayFi. This is about building compliant, efficient financial infrastructure on-chain. The altcoin COTI has been a huge beneficiary here just in the last day. It surged massively, somewhere between 27% and 60%, depending on the time frame you look at.
Why COTI specifically?
The narrative seems focused on its tech around programmable privacy for payments. The market's clearly betting on systems that can navigate that tricky balance between regulatory compliance and user privacy or discretion on-chain.
And beyond RWA and PFI, any other infrastructure plays getting attention, looking further out?
Yeah, a couple of forward-looking things. In DeFi, Uniswap's token, UNI, was up about 6%. That seems tied to a governance proposal floating around to finally activate protocol fees and also establish a dedicated budget for future growth, more sustainability. And maybe the most future-focused narrative getting buzz is around the AI layer. The Ethereum Foundation has this dedicated DAI team.
Decentralized AI.
Kind of, yeah. They're reportedly working on a roadmap for 2026 focused on what they call agentic commerce. The idea is positioning Ethereum as the core settlement layer for autonomous AI agents making transactions, maybe using new token standards. So smart money looking way ahead, betting on AI integrating with crypto infrastructure.
Fascinating stuff. Okay, let's bring it all together. What does this mean for you listening right now? It really feels like we're caught between two strong forces.
That's the perfect way to put it. We have this confirmed new spot demand hitting a 4-month high, pushing up from below. That's undeniably bullish. But slamming down from above, you have that significant technical supply at the $107,500 resistance cluster. It's acting like a brick wall for now.
So the next 24 to 48 hours feel pretty critical for direction. What are the absolute key things listeners should be watching?
Okay, 3 main things to keep your eye on. First, obviously, that $107,500 resistance level. Can this new spot demand actually chew through the selling pressure waiting there at that FIBIMA confluence? If we get a clean, high-volume break above it, the path towards $110,000 really opens up. Second, watch the ETF flows follow through. That $1.15 million inflow was great for breaking the negative streak, but was it just a one-off blip? We need to see the next day's data. Does it confirm the start of a new positive trend for institutional flows, or do we slip back into outflows? And third, the on-chain supply response. As price potentially tries to retest that 107K level, keep an eye on long-term holders. Do they start taking significant profits into that liquidity? And critically, does that apparent demand metric stay strong enough to absorb that potential selling without causing another sharp pullback?
Got it. Resistance, ETF follow-through, and on-chain supply response. And maybe one final thought to leave everyone mulling over.
Yeah, thinking about that TradFi convergence again. Those SoFi and Coinbase moves, it really feels like the debate is shifting. It's not really if traditional finance adopts crypto anymore. The provocative question now is, which type of regulated entity, the established bank moving into crypto, or the established crypto exchange moving into banking, will ultimately win the bigger slice of this newly integrated financial ecosystem? Who defines finance for the next generation? Something to think about.